Taxes are one of the biggest expenses for landlords, but understanding the rules can turn them into a powerful tool for maximizing profits. By keeping accurate records and knowing your deductions, you can reduce your tax burden and keep more of your hard-earned income. But if you don't understand the tax implications, you could miss out on significant savings or even face penalties. So let's break down the essentials of landlord taxes. Audience, I wasn't sure I wanted to do an episode on taxes. I've been asked a lot because I'm not an accountant and I'm not going to be giving tax advice. However, it is important enough for you to have some grasp of the essential concepts because there are things out there that allow you to have a property and be able to use these things for tax loopholes or reduce taxes. There's a whole bunch of different strategies. And I can't get into all of them here, obviously, and partially because I don't know all of them. So I'm going to say this now, and I'll say it at the end of the podcast. Check with your tax professional. Make sure that you verify what is allowed and not allowed in your state or province, in whatever country you're in, because this podcast is heard around the world, and use whatever you can to your advantage, because every single person is also going to have a different situation, whether it's your age, whether the property is in your personal name, in a corporation, and an S Corp in the US. There's just so many permutations and combinations. I think let's break it down, okay? Because the basics are going to be the same regardless of where you are in your tax, journey or in your tax bracket or whatever it might be, okay? So number one, keep detailed records. And what I mean by that is don't be a shoebox landlord. Don't have a shoebox of rental expenses, Home Depot receipts. Make sure that you're tracking all rental income and expenses. Okay, you want to include maintenance, property management fees if you're using a property manager, any utilities you pay. So let's get into that for a little bit. I think the average person doesn't have that a lot of time. You get into a rental property and it's just enough just to buy the thing. Then, of course, there's painting that you have to do. There's a bunch of cleanup, and then you're showing it. You're answering phone calls. Maybe you're answering Facebook messages. You're running back and forth to the property dozens of times, maybe even 100 times. And then you have to go through the pain of screening, credit checks, reference checks, signing a lease, getting a damage deposit, and finally you move them in. Keeping detailed records could start and should start with even a condition report and time and date stamp condition photos. And most of us don't even do that. We figure, well, it was good enough. I painted it when they moved in or just before they moved in. I can use that. Or I have pictures. I don't need a signed condition report. So any kind of documentation, again, I keep saying this is a business. You are running a business. It's not a side project. It's not a side hustle. If you are taking on the burden of a rental property, let me rephrase that. If you are privileged enough to have a rental property, it's not a burden. Make sure you don't make it a burden by ensuring that you are dotting your I's and crossing your T's in every aspect of your rental. But with respect to records and taxes, we're talking about rental income. So how are you tracking your rental income? Let's say, and I don't want to hear, oh, I only have one house. It's up here, right? You want detailed records. At the very least, you want it for your accountant. You want it in case you get audited, or you may need it if you are ever challenged because you're evicting your tenant. Now you're like, what are you talking about, Garret? If I'm evicting my tenant for non-payment of rent, they haven't paid the rent. True. But what happens if they claim that they did pay you the rent? How are you going to prove that you didn't receive it? Are you going to give bank statements? If you're depositing it in a regular bank, maybe they paid you cash 5 months and then 3 months they e-transferred you, right? So I think investing in a spreadsheet, QuickBooks, any other kind of property management software. My whole point is you want to track the rental income, so it's important to track the income, and then you want to track the expenses. Again, this is a business. How do you know what your net profit's going to be, right? You don't want to just have a property for the sake of having a property. You collect your $2,000 a month in rent. It goes into your, personal bank account. Let's talk about that for a second. I know I'm going down a bit of a rabbit hole, but are you depositing your rent and mixing it up with your personal income? Now, your accountant may or may not tell you, depending if you personally own the property, that I guess it doesn't matter as long as you are keeping track of the income and expenses. But the picture that I'm painting for you is very much one that I had when I started with our first rental property, because we were just running around like chickens with our heads cut off, just trying to get the thing rentable. I think you should have, at least this is the advice I give to our rental property management clients, have a separate bank account, have all of the rent going into that bank account, have all of your expenses paid out of that bank account. Now, whether you're writing checks, if you still write checks, or you're doing online banking, paying your utilities, maybe you're e-transferring your contractor or your handy person, should all come out of that bank account, because that's the way to run a business. You don't want to mix up your income and expenses from your rental in your personal bank account, right? It's at the very least, it's going to get messy. Now, let's pretend you have a corporation. You definitely shouldn't be having the tenant e-transfer you into your personal bank account. You shouldn't be putting things into your personal bank account, because that belongs to the corporation. The corporation, by that very definition, is a separate legal entity. If you start, and again, any accounting professionals, feel free to put in the chat or message us if I'm saying anything wrong. I don't think I am. Again, I prefaced by saying I'm not an accountant, but in all seriousness, if you put income or expenses, let's say income or expenses from your personal account, you're now going to have some way to track back into that corporate account. So if you've got an expense into, let's say income, tenant pays you rent, you go to your bank, you're like, oh, I've got $2,000 in cash. I'm just going to throw it in my personal account for now. That's fine. I understand the safety of it. But if you have your property in a corporation, you're going to have to somehow get that $2,000 in your personal bank account over into your corporate account, or you're going to have a line item or a journal entry that accounts for that money, or your corporate account is not going to balance at the end of the month, or you're going to have an income statement that says the tenant paid rent, but there's a hole in the deposit portion because the rent didn't go into the corporate bank account. It actually went into your personal bank account. You see what I'm saying there? So while it could happen, to me, try to prevent it. We're busy enough without having to try to remember at year end what happened 8 months ago because it was cold out and you didn't want to take off your gloves to go into whatever bank, and you were lazy, to be quite honest, right? I mean, so let's just talk about being disciplined, okay? So you want to track all of those rental income and expenses. You want to have it in its proper bank account, preferably in its own rental bank account. And then what I advise our investors to do is to have the mortgage payment, property taxes, and insurance coming out of that other bank account. It doesn't cost that much to create a separate bank account, and then it's very clean. Your rent goes in, your expenses come out, and technically what's left in there is your net income. Hopefully there's lots left over. I mean, I would hope that if you only have one property, you're not depending on the cash flow from it. I mean, a single family home at most, if you're lucky, might have $200 to $300 worth of cash flow, whether or not you're using a manager, but it's not thousands, right? You make thousands on the back end in equity and principal pay down at the end of the year. And that's why we have these things, at least in my opinion. So if you're not living off the income, why even touch it? To me, let it grow. But out of sight, out of mind means it's a lot better to have it in a separate account. Okay? I don't want to get too far off track because I wanted to talk about taxes. But again, we're talking about good principles to save you money later so that everything is organized so you can decide with your accounting professional what I expensed, what income I had, and what we can write off. And we'll talk about that right now. So what kind of expenses do we have? Well, obvious one would be maintenance. Okay, so that could be anything. Broken toilet, clogged drain. You have to hire somebody to paint the place. You painted the place. Now you have paint receipts, brushes, sanding equipment, I don't know, paint trays, stir sticks, whatever it might be. Or something as more significant, like you had to replace the furnace and now you have a $4,500 bill from your HVAC company. Okay, so anything to do with maintenance. Property management fees, I mentioned that. So if you are not in town and you are using a third-party property manager, or you are in town and you're still using a third-party property manager because you don't have time, then that fee is a direct write-off. Utilities. So you might say, well, it's a single family home. I don't have any utilities. The tenant is paying the utilities. But What about when it was vacant? What about that month and a half between the time you purchased it and the time the tenant actually moved in? That's a utility. You had to pay it. Don't forget about that part. Property taxes, I mentioned that. Property taxes can be written off. There are certain things, if you just purchase the property, that can be written off. And this is getting into that gray area where I don't want to give advice. But to the best of my knowledge, when you are purchasing a property, all of your acquisition costs can be written off, not as a current expense, but capitalized against the property because that is sort of part of the purchase price. So, for example, sometimes your lawyer might include in their statement of reconciliation that there's going to be property taxes that were transferred back and forth between vendor and purchaser, but you might have to have your accounting professional tease that out of your acquisition costs, which could be, again, your legal fees, your land transfer tax, those types of things. You want to make sure that any property tax credits that are in there are a direct expense. I'll say it for a third time. I'm not an accounting professional. I know just enough to be dangerous to have the vocabulary, so please check with your accounting professional in your region. Okay, back to our regular program. Know your deductions, okay? Mortgage interest, I talked about that. Property insurance, I hope you have property insurance, and you need to be able to give that to your accountant, write it off. Make sure that even if you paid it as a lump sum and you paid it from another bank account or you paid it personally, and you have a property in a corporation, that you are getting credit for that, and you have a good balance sheet or a profit and loss statement that you can give to your accounting professional that is accurate, okay? There's something called depreciation. I don't want to get too deep into that because, fifth time, I'm not an accounting professional, but depreciation is something that you can do on the books that is a tax write-off that is deferring let's see if I can say it in layman's terms, the cost or the cost of the actual asset itself. And then that will reduce your, I guess, price of the asset, but then you're going to have to pay tax on the difference between that capital gains tax if and when you dispose of the asset. That's as far as I'm getting into depreciation. I already feel like I'm in dangerous territory there. I talked about repairs, okay? What else do we have here? You want to make sure, well, I have it here in my notes, but consult a tax professional. And, you want to make sure that you're consulting with somebody who really knows rental properties. Not to say that every tax professional doesn't. They're going to know basics, but maybe there's somebody who's used to working with investors, used to getting in there and knowing what paint is versus light bulbs versus LED light bulbs, and what is a capital cost versus a current cost. There are some jurisdictions, Manitoba included, that might say that, and this is actually funny, an LED light bulb lasts so long that we have heard arguments at our branch of the government here that it is a capital expense, not a current expense. I mean, we're talking about changing a light bulb. Yes, but the light bulb lasts 10,000 hours, so therefore it's going to be in the property forever, so therefore it's a capital expense. Like, are you kidding me? So just make sure, right? Because we're talking about categories. And also, on the other side, you don't want to have a tax professional that's too aggressive. Because if they're too aggressive, and maybe they can argue it in tax court, it may trigger an audit to save, I don't even know how much you're saving, and that audit is going to open up more cans of worms, and at the very least, if you don't have any other things they find, weeks and weeks of time. If you're even organized enough and having all of your documents and original receipts and everything else, I don't know, in file folders, scanned, whatever it is, instead of that shoebox. Okay, so you want to make sure you work with an expert to ensure compliance and optimize your returns. Okay, did I mention I'm not a tax professional? Okay, in summary, being informed about tax implications helps you maximize profits while staying on the right side of the law. So we're going to put together a landlord tax deduction checklist. There's going to be a disclaimer there, of course, because you can't deduct everything equally depending on what country you're in, what state you're in, what province you're in. But we still want to put it out there because we think it's a good starting point as a resource to help you identify potential savings and honestly just create a conversation with your tax professional. So click the link in the show notes to download it.